Yes, David, we've all been trying to digest the top targets that were unveiled by Premier Li Keqiang yesterday in his work report, and I'm very glad to say I'm joined now by Dr. Liang Hong, who is the chief economist at CICC, which is really China's most influential investment bank. Dr. Liang, thank you for joining us.
Thanks for having me.
Let's start with that GDP target of about 6.5%. Just how realistic is it that the Chinese government can hit that target by the end of the year?
I think the government and even the international community probably this year has more confidence they will be able to reach that target and probably slightly surprise on the upside. Just look at the global environment. Global growth has been in a much better shape now compared with a year ago. Even just looking at the export sector, that should give investors a little bit more confidence they can reach that target.
What do you see as the key challenges, though, facing growth? Because we've got domestic challenges and then, of course, we've got those external challenges with protectionist sentiment that Premier Li mentioned in his work report as well.
I think the way we see it is there seems to be an old economy and there's a part of the new economy. And I think this rebalancing or restructuring the economy has to be managed in a reasonable pace. If the old economy slides too heavily, too fast, you get the overall economy dragging down. So it's again still about how fast the new economy is growing, how fast the old economy is being restructured. That balance.
We heard more positive words on the need to focus on those financial risks and to rein in credit. But we've heard those words before, and many would say that there's been little action on the ground, that debt to GDP is around 260%, and that there's a rise in the level of non-performing loans and bond defaults.
Yeah.
What are we going to see from policymakers? Concrete action? Do you expect them to take concrete action between now and the Party Congress at the end of the year?
I think one of the things, a small piece of good news, if you look at that GDP ratio, that ratio has been accelerating since 2012. But last year was the first year that growth rate of that GDP ratio started to slow down. I think very much thanks to GDP growth stabilized and nominal growth has picked up. So the challenges facing the government looks a little bit better because growth has stabilized. I think some of the structural issues you mentioned, I think they're moving on that. It is including local government debt swap, including some of even debt equity type of swap, restructuring of the old companies ongoing. I think hopefully this year with growth being, they have more confidence in the overall growth being stabilized. They could take a little bit more forceful actions to close down so-called the zombie companies.
How much should we read into the changing of the language around the yuan? Premier Li talked about greater liberalisation, but the language was changed from last year. How significant is that?
That language was changed middle of December after the working committee's meeting of the Central Communist Party. It seems to be emphasizing more on stability rather than the market mechanism. And from that point onward, we have seen much more stability in the currency.
How can they maintain a stable currency, though, when we've got the Fed looking very likely that it's going to raise rates in March? We may well get 3 hikes this year. That's going to put a lot of downward pressure on the yuan, isn't it?
And that's just one dimension of looking at what affects that exchange rate. The other side is how much confidence domestic investors and overseas investors have in the Chinese economy. I think on that matrix, things are improving. It seems to be stability has been much better, and I think confidence is coming back gradually in the domestic and international community about China being able to pull through this transition.
What do you expect to happen with the capital outflows then? Do you expect those to ease towards the end of the year?
Actually, we are, at the moment, the capital control has been enforced. We think that's probably a less evil compared with the alternative because the outflow and all these questions about RMB started to threaten domestic stability. I think to put a stop on that probably is the less evil at the time. So I think at this time, this year, we think as China gradually demonstrating its capability to manage growth, to manage reform, confidence will come back and capital flows will subside. Capital outflows will subside.
Do you expect a benchmark rate rise from the Pboc this year?
We think that possibility probably will rise towards the end of the year. I think the word is we have paid so much attention to real GDP growth, but what has been missing is China has moved from deflation, nominal growth was 6% at the end of 2015, and at the end of last year it started to move back to 9%. It looks like it's going to go to double-digit nominal GDP growth. And I think, as the governor said, at the moment, they don't see much rate hike pressure. But if the economy continue to recover along the global economy, I think rate hike, even currency appreciation could be a topic. You know, if next year we talk about Chinese economy, they may be back on the agenda.
Obviously, one key risk is Donald Trump and his threats of tariffs.
Yeah.
How significant would that impact be? He's talked about tariffs of around 30%.
Yeah.
It changes. Some see a nominal set of tariffs on things like the steel industry. How prepared is China for that?
I think that has introduced so much uncertainty because this is the first time a Republican president started to advocating trade protectionist policies. But I think at the same time, it probably introduced a little bit more certainty in the China part of the response, because China will, of course, try to work with U.S., but at the same time, they probably have to work harder on to, how to jumpstart their domestic demand, because whatever happens, this is their best defense.
Another area that investors are very focused on as well is the property sector.
Yes.
And the government has seemed to get to the point where it's got a bit of a Goldilocks balance now. The prices have come down in cities like Beijing, and some of the excess capacity has been eaten up in the third and fourth tier cities. Do you expect further curbs on the property market or some pulling back of those curbs this year?
I think it very much depends on whether they can come up with more supply in the first tier and second tier cities. We are seeing, the surge of property demand in the past 15 months have taken up all the inventory mostly in the first tier, second tier cities, and that's part of the reason for the price inflation in that sector. The government has mentioned in the work report they will try to come up with more land supply, and at the same time they have one target this year. They're going to increase urban residents by 13 million. How would you house them? So they have to come up with better supply policy in cities where migrant workers are still coming in. If they can do that, I'm more confident property price stabilization will stay. Otherwise, same problem will emerge again.
The government also mentioned that they would like to encourage foreign invested companies to list in China and issue bonds here.
Yes.
How significant is that?
I thought that got everybody's attention and excitement in our industry. If they mentioned like foreign companies can raise equity and bond in domestic China. We haven't seen that mentioned for a while, so let's see what it may involve. I think the bond market is being opened up. The equity market was struggling with its own issues. If the government's policy and changes prove to be working, they may have the confidence to allow some of, at least first, the red chip companies to come back.